Welcome back, everyone. There's been a pretty bad week in the market, with the S&P 500 being down about 2% in the last week and being down about 4% in the last month. My portfolio is down about 1% in the last week and about 3.3% in the last month. It's been the worst week in the S&P since the start of the pandemic back in March of 2020. But despite all of this, I'm continuing to buy into the dip, and I want to go over why I think this will pay off in the future, along with what I bought and why. Finally, there was a Senate hearing that I'm sure you all heard about, and I want to talk about this part right here.
Will you commit to ending Finsta?
But first, if you enjoyed the video, be sure to leave a like and subscribe. It really helps me out a lot. Obviously, the market has been pretty sucky the last month. My gains have basically been set back to July when I had $6,000 less invested than I do now. The value of my holdings is down about 4% from its highs. It's easy to get discouraged when every day you look at your money shrinking more and more, but I want to talk about why this doesn't bother me and why these pullbacks make me even more excited to be investing. So many people freak out when their portfolio goes slightly negative and they panic. We can see how much people have been panic selling by looking at fund outflows over the last month. Funds have had the most outflows in the last month, with a total of $6.24 billion leaving the funds, and the market had the worst month since the start of the pandemic in March of last year. But when you really think about it, it doesn't make any sense to sell when things are falling. Pretty much the best thing to be doing when investing is doing the opposite of what the average person is doing. When the market sells off and people start to panic, buying into that dip is great. Buying stocks at cheaper prices lowers your risk when making that purchase. When the market starts racing upwards, that's when more people start throwing their money in, but that's when you need to be more cautious and make your investments wisely. Buffett said it best when he said, "Be fearful when others are greedy, be greedy when others are fearful." I'm not going to be fearful of all the things that seem to be affecting the market, because I know that most of them will be resolved in a short period of time, and most likely they're all going to be working out fine. Evergrande is still expected to default on its debt, especially since it's missed its payments already. The government already passed a bill to avert a government shutdown. There's pretty much no chance that Congress is going to let the US default on its debt, and if it did, we'd have much bigger issues than the stock market falling. Inflation and jobs data next week is expected to be better than it has been in the last few months. The Fed is probably going to start tapering in a few months. The infrastructure bill is one of the bigger unknowns. The $1 trillion hard infrastructure bill is likely going to be passed, but the larger social infrastructure bill is still up in the air, especially now that they're renegotiating how large it's going to end up being. But most of these things are going to be solved in the coming weeks. Once all these fears start to alleviate, then I think the market is probably going to rally. I want to get my buying done before that happens. I believe in all of my holdings, so if I can get any of them at cheaper prices, I am more than willing to continue to throw more and more money into them as they get cheaper. Even just looking at Apple, if we're over here in the 3 months, it used to be trading around $157, but now it's trading at $142, but I don't care. I'm much happier about it being down here than I am up here because I'm not done building my position. I want this thing to fall all the way back down to these levels. If I could get it under like 120, oh, I'm going to be throwing so much money into this. I want this to happen. You should be wanting the companies that you want to be building larger and larger positions in. You should want them to be falling. When the market pulls back, it's a good thing for people who still have a long time horizon before they need to start using the money that they're investing. I don't have any plans on using this for, at the very least, 20 years. So if the market could just crash now and let me buy tons and tons of stuff at awesome prices, I would be so happy about it. As you can see from this table of all my holdings, you can see that a lot of things went down last week. A lot of them fell over 2% last week, with some things like Dominion Energy falling over 3%. And with all this, I threw more money into several of these companies. I put $1,000 in last week into Walgreens, Aflac, Store Capital, and Vici Properties. I also added 2 new companies, which you can see on here, but I'm not really going to talk about because I want to make more in-depth videos about why I bought them and an analysis of them. So expect that coming in the future. But overall, I bought 2 shares of Walgreens, 2 shares of Aflac, 4 shares of Store Capital, and 5 shares of Vici. With all these purchases, my annual dividend income has increased to $1,077 a year. So we're getting really, really close to having an average of $100 a month in dividends, which I'm really excited about reaching. Now, why did I buy these companies? If we look at Walgreens, it's down 3% in the last week, down 7% in the last month, and it's already lower than what my cost basis was. So buying more is great because now it even has an over 4% dividend yield if you buy right now. Why did I buy Store Capital? It's down 2.5% in the last week. It's down almost 8.5% in the last month. Why did I buy Aflac? It's not down a lot in the last week. It's because it recovered yesterday, but it is down about 6.5% in the last month. Why did I buy Vici? Down almost 7% in the last month. So many things have had such big pullbacks that all of their prices are getting to a point where it's just almost a no-brainer to continue to buy into them, especially the ones that I was buying at a higher price. Because if I liked it when Vici was selling at $30, I better love it when it's trading at $28. The same with Walgreens. I was buying it at $50. Now it's trading in the low $48. If it falls more, even better. When the stock price drops, it makes the risk that I'm taking buying each share go down more because there's less room for it to fall and a better chance that it's going to go higher. Especially when I think it's worth a higher price. I'll be able to get a better return on the capital as well as a better dividend yield with these companies. Now with the stuff that I'm doing, let's talk about this guy. This is Senator Blumenthal. This was during a Senate hearing this week between the members of the Senate and Facebook. They were talking about Instagram and some of the things that Facebook does. So let's watch the clip here.
Will you commit to ending Finsta?
Senator, again, let me explain. We don't actually do Finsta. What Finsta refers to is young people setting up accounts where they may want to have more privacy. You refer to it as privacy from their parents. What in my interaction with teens, what I found is that they sometimes like to have an account where they can interact just with a smaller group of friends.
Well, Finsta is one of your
actually.
Finsta is one of your products or services. We're not talking here about Google or Apple. It's Facebook, correct?
Finsta is slang for a type of account.
Okay, will you end that type of account?
I'm not sure I understand exactly what you're asking. What I can say is that based on what we've seen in terms of teens using those kinds of accounts, we've actually given them additional privacy options to address those kinds of issues where they want more privacy so that they can have more privacy.
Well, I don't think that's an answer to my question.
Overall, I think that interaction was pretty bad. Blumenthal clearly has no idea what he was talking about. And this is kind of the problem that I feel that Congress has with trying to regulate these bigger tech companies. They really just don't have an idea on what all these companies do, what their products are, what their services are. It's just kind of abstract to them. While we continue to have the people of like these generations that didn't grow up with using Facebook, they didn't grow up with using Google, all these things are just new to them. I wouldn't really expect them to be able to create any meaningful legislation that can regulate these companies because they just don't understand what they would need to do to regulate it in an effective way that might lower the influence that these companies have on everybody. Once newer, younger people start to take over in Congress, I could see more change coming then. But in the meantime, while Senator Blumenthal here, who doesn't understand what Finsta is in charge, I wouldn't expect anything meaningful to really change with big tech for now. In the future, this could definitely change. And that's it. I want to thank everyone for watching. Next week, we have another round of jobs and inflation data. So hopefully that is going to be moving in the right direction so we can see the market kind of rally after that. But if you enjoyed the video, be sure to like and subscribe, leave a comment or email me at the link that I have in the description. Leave any comments that you have there. I'll see you all next week. Bye.